guys, it's Stock Curry, and in today's video we've got to cover some very important economic news that came out over this 3-day weekend. We've also got to talk about what's going on in the world economy, and then we got to talk about what's going on this week. So let's get into it! Before we get into the economic news, let's start with some crypto news. Another cryptocurrency lender, Webull, has paused withdrawals as the market crash takes its toll. This comes on the heels of two other cryptocurrency exchanges pausing withdrawals over the past 2 weeks. There are now reports that as many as 80 cryptocurrency exchanges may be facing the same difficulties, meaning as many as 80 of the smaller cryptocurrency exchanges may have to stop customers from withdrawing funds. Of course, there are a few big ones that so far are not in trouble, such as FTX and Binance, but most of the others are having difficulties. Obviously, this is causing the price of cryptocurrencies to go down as people don't want to be investing in cryptocurrency right now because they're afraid they might not be able to withdraw their money. And Bitcoin continues to trade right around that $19,500 support level that I had talked about earlier. So this obviously is going to continue to be a problem, and I don't see the price of cryptocurrencies rising anytime soon. In fact, if anything, I see the price of Bitcoin continuing to fall all the way down to the next major support level of $12,500. Now on to our economic news, and here in the United States, Mark Zuckerberg of Meta, has given a dire economic warning to all of their employees. Essentially, Zuckerberg said that this was the worst he had ever seen in Facebook's history, and he said that they would have to do some pretty significant layoffs. Zuckerberg said Meta faces serious times and economic headwinds are fierce. They intend to add only 6,000 to 7,000 engineering positions, down from an initial goal of 10,000. And Zuckerberg said, I think some of you might decide that this isn't the place for you, and that self-selection is okay with me. Realistically, there are probably a bunch of people at the company who should not be here. Well, I gotta tell you, these words from Zuckerberg sound very similar to the words Elon Musk told his employees over at Tesla right before announcing a 10% of their workforce layoff. It looks like these large companies continue to have difficulties and more layoffs are coming. There is no doubt that we are right now in a recession. And the Atlanta Fed, which gives some early guidance on GDP, is actually predicting that second quarter GDP is going to be negative. Meaning, if they are right and second quarter GDP is negative, keep in mind we'll find out the official numbers on July 28th. If the official numbers do come in negative, then we are officially in a recession. And right now, the Atlantic Fed, as well as numerous other economists, are saying, yes, second quarter GDP was negative, and we are in a recession. Now, let's just assume for a second that we are in a recession, that the Fed is correct and everybody else is right. We are in a recession. We can expect more companies like Tesla and Facebook to continue to do layoffs. This obviously is going to hurt the job market and bring unemployment down significantly. Right now, it does look like the country is facing stagflation, just like we saw during the 1970s, where we had rising inflation at the same time that we were going into recession. It's a terrible time for the economy. There are no good solutions. The only way to fix inflation is to make the economy worse. The only way to fix the economy is to make inflation worse. You cannot fix both. You either ruin one or ruin the other, or you might even ruin both. Right now, it sounds like the Fed is far more concerned about getting inflation down, even if that means putting us into a recession. And unfortunately, the recession is not limited to the United States. It now looks like we are going to enter a global recession, just like we saw during the financial crisis. Nomura says at least 7 major economies will hit a recession in the next 12 months. That includes the United States as well as 6 others. Some of the countries that Nomura called out include the UK, Japan, South Korea, Australia, and Canada. I also read another report that for the first time in years, Germany was no longer a net exporter. For many, many years, Germany has been a net exporter, and for the first time last quarter, they were actually a net importer of goods. That's not good for the German economy either. So overall, it does look like the entire world is in trouble here, and the whole world is entering a global slowdown and quite possibly a global recession. That means it's going to be very, very difficult for the United States to crawl out of its recession. This recession that we're about to enter, normally a bear market would last 18 months. But when you start talking about a major recession like the one that we're about to enter, we're no longer talking about 18 months here. We're looking at a minimum of 24 months. So we're looking at this recession, if it did start in Q1 of 2022, going all the way through the end of 2023 and into the beginning of 2024. Now, that doesn't mean the stock market is going to drop nonstop that whole time. There will certainly be periods where we rise, like, for example, I expect a little bit of a recession rally, if you will, a little bit of a rebound rally in November and December, and then eventually at some point in 2023, the Fed is going to stop raising interest rates. They're going to say, okay, the recession is bad enough. We got to turn things around. And they're going to stop focusing on lowering inflation. They're going to start focusing on getting the economy back on track. At that point, they're going to start lowering interest rates again. And at that point, I think we'll hit a macro bottom in the stock market and we'll go on a new major rally. But at this point, I don't think we're going to hit a macro bottom until sometime in 2023. I think any rebound rally we get in November and December of this year is going to be short-lived. Still, we're going to have to watch this week by week because we have new economic news coming out every single week, which is going to help us determine if we're going put options this week or call options next week or whatever it is we do. So let's take a look at the economic news coming out this week so we can figure out how to play this week. So the highlight for this week is going to be the June jobs report that comes out on Friday. And the unemployment rate is expected to remain at 3.6%. Now keep in mind, the only reason the Fed is willing to do so many rate increases is because the job market is strong. But if we start to see cracks in the job market, like the unemployment rate starts to rise, or we get a significant amount of new unemployment claims, something like that, if the number of open positions in the United States drops significantly, if any of those things happen, it might cause the Fed to take a little bit of a pause on raising interest rates so fast. And believe it or not, even though we're about to enter an official recession, we might see the stock market go up on Friday if the jobs report ends up being much worse than expected, because it means the Fed won't necessarily raise interest rates as fast. Now, if the jobs report comes out on Friday and it's in line with expectations, unemployment's the same, or if it's even better, let's say unemployment goes down to 3.5%, something like that, I would expect the stock market to drop because the Fed can get a lot more aggressive with the rate hikes and fight inflation a lot more if the job market remains super strong. So just keep that in mind. I don't think it's going to have a major impact on the market on Friday, but it could. So just know that that's coming out on Friday. 3.6% is the unemployment number we're looking for. Any lower than that, expect the stock market to go down. Significantly higher than that, you might expect the stock market to go up on Friday. Now on Wednesday, we also have the Supply Management Services Purchasers Managers Index. Whew, that is a mouthful, but it's a very, very important economic reading that's coming out. You might recall how in May, when that number came out, actually it came out in June, but it was the numbers for May, that we saw significant slowdowns in the purchases of supplies, especially coming out of the Asian countries. And this caused significant concern for the possibility for a global slowdown or a global recession. And Nomura is saying that there's going to be 7 major economies in a recession before the end of the year, or in the next 12 months. That was based upon May's Services Producers Suppliers Index, whatever that thing is. The thing coming out on Wednesday. It's a major, major thing that you need to watch out for. So keep your eye on that. But unfortunately, it might be overshadowed a little bit by what else is coming out on Wednesday. The Fed's meeting minutes from its mid-June meeting are coming out on Wednesday. Now, these meeting minutes come out on Wednesday at about 10 a.m. That's about 30 minutes after the market opens. And I don't really know what's going to happen with these. Sometimes they come out and the markets barely move. Sometimes they come out and the markets move massively. It really just depends upon what's in those meeting minutes. If we get something like the Fed's willing to cause a major recession in order to get inflation down, they don't even care about the economy anymore, wow, expect the market to drop. If they come out and say something like, we're starting to get concerned about a recession, we might have to tone it back on our interest rate hikes, then you might expect the market to rise. Personally, I think it's going to be more in line with what Jerome Powell said. The one thing that leaves a little bit of question up in the air is the fact that, keep in mind that the Fed was planning on raising interest rates by 0.5% or 50 basis points at their last meeting. They actually raised them by 75 basis points. And that was based upon some very late breaking news. It wasn't news that the Fed has really had a lot of time to forecast or talk about. So the meeting minutes might give us a little bit more insight on the rising inflation that we're starting to see. And keep in mind that the CPI numbers for May were the highest in 40 years. They didn't come down like we expected them to. They actually went up. They were at 8.6%. And if you're wondering where CPI is expected to be for this month, it doesn't come out this week, it comes out next week. But if you're wondering where it's expected to be for this month, 8.8%, even higher than May. So right now, the headline CPI rating is actually, people think it's going to come out higher than it did in May, meaning inflation is continuing to go up. And if that actually ends up being the case, it's not going to be good, guys. Not going to be good. So anyway, we have a lot of economic news coming out this week. Monday and Tuesday, nothing really happening. But with Wednesday's two massively major economic news, I think we're going to see major volatility on Wednesday. I would not be surprised to see the NASDAQ go up or down 3% on Wednesday alone, or more, 4% even. I would not be surprised. The news is going to be that big. So Monday and Tuesday, I don't really know what to do. What we might end up doing is I might end up opening a straddle on Tuesday right before the market close. Straddle, what that does is you buy a call option and you buy a put option at the same time. So same date, and it can be the same strike price. You could also spread it a little bit, but it's called a straddle. You could also do a strangle, same thing. It makes money if the market moves significantly in one way or another. It makes money when you don't know what way the market's going to move, but you know the market's going to move. So on Wednesday, so long as the market goes up more than 2% or down more than 2%, a straddle or strangle will make money. So it will lose money if the market does not move. Let's say the market only goes 1% move on Wednesday, we'll lose money. But if, so long as it moves more than 2%, we can make money. If you want to know everything I'm buying and selling, you can come join the VIP Discord. I post all my trades in there. And in addition to posting what I'm buying and selling, I also explain it and give the reasoning behind it. And very often I'll give alternative trades as well. So people say, Scott, I don't have level 3 options trading. I can't do multi-leg options. Do you have another strategy that might work? And I'll find something else. So I put a lot of things in there that I don't personally trade, but just suggestions and helps for other people that maybe don't have the same amount of buying power or don't have the same level of options trading. And even there, we got some people in there don't have options ability at all. They can just buy stocks. So we'll find some leverage ETFs that are bullish or bearish. They can take some advantage of some of these market movements. If you're interested in joining and knowing everything on buy and sell, you can join the VIP Discord at stockcurry.vip/getvip. That's stockcurry.vip/getvip. It's just $20 a month right now, but that $20 a month price will be increasing here very, very soon. And I also wanted to remind you that Webull has extended their 6 free stocks up to $12,600 promotion. And so if you want to get 6 free stocks worth up to $12,600, you can use my link in the description below to sign up for Webull. And all you have to do is use my link in the description below to sign up, deposit $1, and you will get 6 free stocks worth up to $12,600. If you want to trade options and you're not in the United States, I recommend Interactive Brokers. Interactive Brokers allows options trading all throughout the world in over 100 different countries, and their trades are extremely inexpensive. Trades start at just $1 US or $1 Canadian. I think it's €4 or $6 Australian, depending on where you live. Very, very, very inexpensive broker. I highly recommend Interactive Brokers, and I have a link for them in the description of this video as well. Alright guys, I hope you have a lot of success trading. Don't forget to hit the like button and subscribe. And if you're on YouTube, click the bell icon and click all so that you can get notified when I release my next video. I will see you tomorrow.